Hello and welcome to September 3rd, KR 314% with a fallback. Our stochastics also falling back a little bit at 7.73 and the SPY is holding steady at 22.9. So let's go on to the KR chart. There we are. We had a inside day. This is called an inside day. That is a candle formed inside of another candle preceding it. What it indicates a possibility that a probability of it continuing up. Also have to note that today is a Friday holiday, Holiday Friday. Holiday Friday means in the market that we're into 3 days. We're going to have Monday off. Big money, if they have weak positions, and this is actually brought up in Jack Schwager's book of Unknown Market Wizards, that pro traders will let go of their weak ones and only keep the strong ones over the weekend, especially over a holiday. So let's use this as an example. If we're doing a let go Friday, we would have out of the market on DBA, ATB, RCX, YELP, Telray, and AT&T. All these would have been dismissed this afternoon, done, and only keep these guys over the weekend. That's how many pro traders will handle the weekend, especially long weekends. And the problem is with long weekends is that these weekends, especially this holiday, is an American holiday. It's not worldwide. So anything can happen around the world that could set off some very negative news come Tuesday when the market opens again in New York, USA. So it's typical to have a pullback of some kind of holiday Fridays, and that's what that relates to, is that big money and pro traders. And then, like I said, there are some pro traders who will liquidate let go Fridays, and then there are some that only let go on holiday Fridays. I'm repeating myself, sorry. All right, moving on. So we are 314, not too bad, and we're still doing good. We're still way above. We are getting ready to, if we can close above $50 in the next coming days, then the objective will be is to move the close to the 10th ratio, and we'll at least collect a 10-to-1 if price reverses prior to us getting out on October, and our October date is the 14th of October. Oh, let me go ahead and adjust that. There it is. There's our expiration, and we expire at the end of day, 1 day prior to the expiration itself. That said, let's go on to some good news here, and that is PG. PG has returned back to the 100% ROI club, the ROI 100% club. It's returned back. It closed at 102. So we had that dip, a little bit of a pullback, came back up, crossed below the third ratio. Our stop is still here at the first ratio, and that's because I want to give this plenty of running room to reach that October, and we're at 102, and that's pretty much it. Any other maybe rules that we might apply in the last 30 days to protect profit? It could be a consideration. I mean, what would the pro traders done? Well, there in the Market Wizard books, there were very few traders that went DTE. They were mostly leap traders. What I mean by leap traders, they were ones that would buy 9 months or more, preferably 12 months, because they wanted to get to also avoid the tax consequence and keep a capital gains rate, and then start looking for any exit will do on their return on investment. And there was several traders expressed that they would take profit at 100 ROI. They would just like 100% ROI, done. Take that profit, grab it, go do another 100 ROI. 100 ROIs in the trading field, also in the lexicon, is also known as home runs. Anytime you get out at 100%, you have a home run. So this KR is actually sitting on a 3 home runs right there at 300%. All right, good going on PG. Going on to XLC. Let's go XLC. XLC is at 41. It was a bit of a pullback. It had 48% yesterday. I believe it was 48. It was 48 up here, I think. So I forgot what it was down here. But we are doing okay. We're doing okay. We did go to the first ratio. So if price comes down and hits our first ratio, let's go zoom a little closer to see that. If it does, then we do it. I mean, this is a DTE trading plan, but it's a DTE trading plan with exits, with stops. We're not doing ODT, which is what the anchors are happening here with Yelp and AT&T. These two did not have stops, and look at the pain that we're going through, and the results to our account. So this is a perfect testing ground. This is the benchmark that we're working against, and proof that we are not doing ODT. And as mentioned before, ODT trading means you're trading to date to expiration without stops. And that would also, again, apply to a couple of traders who did date to expiration trading long leaps, long term, and without stops. But they also would suffer through the pain because they had the patience to knowing with the conviction that the trade was going in the direction. But it was very, very rare. I mean, I must have gone to at least 30. At least over 30 or more interviews with Jack Schwager's books. And so you would maybe find 1 or 2 out of 30 that would do that kind of trading. Okay, our last one in positive territory is XLP. And let's see what XLP is up to. Okay, XLP is, oh, wow, XLP has cleared the initial. We should be here at 72.20. We see again an amateur mistake on my part. But let me check to make sure that I did move it and just did not check confirm my notes. So we should be at 72.20, and we are at 721. So we are almost lost opportunity here. So let's go ahead and do that. 72.20 is what we got to do. So we'll go ahead and change our text, and that occurred here on 9/2. So we're going to go ahead and backdate our note calendar. This is now an EPS, and now this is 72.20. And we'll go ahead and grab that and copy it, send it to the notes, come up to the bubble, cancel and replace order. Do not hit cancel order because it will cancel the order entirely. Go to the order shift, 72.20, and set to the confirm and go and confirm 72.20 and reset. Okay, we're good. So now, if price was to come down and visit us back here, then we have just reduced our potential minus percentage. First ratios on average, not perfect, but on average is about 40%. Could go as deep as 50 or 60 and go as low as only 30. So about 40%. And on the upside here is about the same. It runs about maybe 30% on the upside for the return too. Okay, that said, that is the conclusion of that. Check on Yelp, because the reason I'm checking on Yelp is because Yelp is a November expiration. I'm pretty much giving up on AT&T. AT&T has been rubbing them the bottom. They only got 30 more days to catch up, and then they're gone. And then I'll be just as happy to get rid of them off the scoreboard. I mean, the damage is done. It's already taken out. It's already dialed in on the balance. So there isn't much we can do there. We did have a bit of a pullback. It fell below the 10 EMA. But again, this is a Friday protection move. I don't see this as any danger. I would say that if it came down here and started coming along here on $37, then there'll be some kind of worry. But again, this is a no stop, so it's not going to affect anything until we get to November. So that's it. Telray is up. So let's go ahead and get ready for Telray. And I thank you very much for stopping by and checking it out.